On average, 30% of new real estate investors face financial losses within their first few years. The reason often lies in their approach to risk and return. In this video, we'll discuss how to avoid such losses and minimize risk and maximize returns. Smart strategies for real estate investments. Keep watching to learn how to protect your assets and achieve financial success with proven strategies. Understanding real estate risk management. Real estate investing may seem straightforward, but without careful management, risks can turn potential profits into substantial losses. Risk management in real estate means identifying, evaluating, and addressing potential threats to your investment. It's crucial for safeguarding your assets and ensuring long-term success. Understanding and managing these risks is essential because they directly affect your financial stability. Market conditions, such as changes in supply and demand, interest rates, and economic trends, can impact property values and rental income. Financial risks like fluctuating interest rates and economic downturns can affect your ability to finance and maintain properties. Environmental risks, including natural disasters and contamination, can threaten property value and safety. By recognizing and mitigating these risks, you can better protect your investments and navigate the complexities of the real estate market. Assessing market risk factors. A sudden change in the market can turn a promising property investment into a risky venture. Market conditions, including supply and demand, directly influence property values and rental income. When demand for properties exceeds supply, values and rental incomes typically rise. Conversely, surplus in the market can drive both values and rents down. Interest rates are another critical factor. Higher interest rates can increase borrowing costs, which might reduce your profit margins. Additionally, environmental risks such as natural disasters and climate change can have severe impacts on property values, often requiring expensive repairs or adjustments. By staying aware of these factors and their potential effects, you can make more informed decisions and better protect your investment. Developing a risk management strategy. What if you could prevent financial setbacks before they even happen? Diversification is key to managing risks in real estate investments. By distributing your investments across different properties and locations, you can minimize the impact of any single downturn or issue. This strategy spreads out your exposure and reduces the potential damage from market fluctuations or property-specific problems. Thorough due diligence is equally crucial. Conducting detailed market research, property inspections, and financial analysis before making an investment helps you spot potential issues early. This approach allows you to make informed decisions and avoid unpleasant surprises. Securing the right insurance coverage is essential for protecting your investments. General liability insurance covers accidents on your property, while property insurance protects against damage from events like natural disasters. Together, these steps ensure that you are well prepared to handle unexpected challenges and safeguard your investments. Managing physical property risks. Ignoring routine property maintenance can result in costly surprises down the road. Regular inspections and upkeep are essential for preventing minor issues from becoming major expenses. By staying on top of maintenance, you can protect your property's value and avoid unexpected repair costs that might strain your budget. Environmental assessments also play a critical role in managing property risks. Evaluating potential environmental hazards helps ensure that your property complies with regulations and avoids future legal complications. Addressing these risks proactively not only preserves your investment, but also keeps you aligned with environmental standards and safeguards your property's long-term value. Evaluating financial risks. The financial landscape of real estate is far from static, with interest rates playing a significant role. Fluctuations in interest rates can affect how much it costs to borrow money and directly impact your investment returns. When rates rise, borrowing becomes more expensive, which can squeeze your profit margins and alter your investment strategy. Market conditions also play a crucial role in financial risk. Economic indicators such as unemployment rates and inflation, alongside supply and demand dynamics, can significantly influence property values and rental income. Understanding these factors helps in predicting market trends and making informed investment decisions. Environmental risks are another aspect to consider. Natural disasters or environmental changes can diminish property values and lead to unexpected expenses. Assessing these risks helps in preparing for potential challenges that could affect your investment's stability and profitability. Diversification tactics for real estate portfolios. In real estate, diversifying your investments is more than just a smart move. It's a crucial strategy for managing risk and maximizing returns. Investing in different types of properties such as residential, commercial, and industrial helps spread risk. Each type behaves differently in various market conditions, so a mix can protect you from downturns in any single sector. Equally important is diversifying geographically. By spreading your investments across different regions, you shield your portfolio from local market fluctuations. Economic conditions in one area might not impact another, which balances out potential risks. Real estate investment trusts, or REITs, offer a way to diversify without owning properties directly. They provide exposure to a wide range of real estate investments, spreading risk across multiple properties and sectors. Partnering with other investors can also expand your opportunities. Collaborating allows you to share both the financial load and the expertise needed for larger, potentially more profitable investments. Understanding insurance solutions. The impact of having the right insurance can be dramatic in safeguarding your investments. General liability insurance is crucial for covering claims from third parties who may suffer injuries on your property. This type of insurance protects you from costly legal fees and settlements, ensuring that you're not left financially exposed. Property insurance provides coverage for damages caused by natural disasters like floods, earthquakes, or fires. Without this protection, you might face substantial repair costs that could severely affect your finances. Environmental risk insurance addresses issues related to property contamination and other environmental hazards. This coverage helps manage the costs associated with cleaning up and mitigating environmental damage. Rent loss insurance is vital for protecting against lost rental income if your property becomes uninhabitable due to damage or other disruptions. It ensures you continue to receive income even when the property is not generating revenue. Lastly, an umbrella policy offers an extra layer of protection beyond your standard insurance. This additional coverage can be crucial in handling large claims or lawsuits that exceed the limits of your regular policies, providing you with comprehensive financial security. Complying with regulatory guidelines. Navigating the maze of real estate regulations can be daunting, but staying compliant is crucial for protecting your investment. Understanding and following local real estate laws is essential. These regulations can vary significantly by location, and being familiar with them helps avoid legal troubles and ensures smooth property transactions. Environmental compliance is another key aspect. Assessing and adhering to environmental regulations can prevent costly fines and potential project delays. Ensuring your property meets these standards not only avoids legal issues but also supports sustainable practices. Liability protection through adequate insurance is necessary to guard against legal and financial risks. Without proper coverage, you may find yourself exposed to significant costs from legal disputes or unforeseen issues. Ensuring that you have the right insurance safeguards your investment and provides peace of mind. Conducting market research. When the stakes are high, knowing the local market can make all the difference. Start by thoroughly analyzing property prices, rental rates, and overall market demand in the area. This helps you understand the current value and attractiveness of potential investments. Identifying who will be interested in renting or buying your property is just as important. Knowing the target demographics and the rental needs ensures that your property will attract the right audience. Economic conditions play a significant role in market performance. Assessing factors like interest rates and general economic health can reveal potential risks and opportunities in your investment strategy. Comparative analysis is essential. By examining similar properties, you can gauge their performance and estimate potential returns on your investment. This approach provides a clearer picture of what to expect and helps in making informed decisions. Best practices for minimizing risk. The difference between a successful investment and a costly mistake often lies in the details. Conducting thorough market research is a foundational step. This means digging deep into property values, rental rates, and market trends to ensure you are making well-informed decisions. Diversification is another key strategy. Spreading investments across different property types and locations helps reduce the impact of a downturn in any single market or sector. Understanding your own risk profile is crucial. Assessing how much risk you are willing to take will guide you in choosing investments that align with your comfort level and financial goals. Keeping a close eye on cash flow is essential. Maintaining a positive cash flow ensures that your investments are generating the income needed to cover expenses and provide returns. Lastly, staying updated on regulatory compliance cannot be overlooked. Regularly reviewing and adhering to local laws and regulations helps avoid legal troubles and ensures smooth operation of your investments. With the right strategies, you can turn real estate investments into a reliable source of income and growth. How do you approach risk management in your investments? We'd love to hear your thoughts. Drop a comment below. Don't forget to like and subscribe for more tips